The most gender-diverse companies are 21% more likely to outperform their less diverse competitors. High gender-diverse companies outperform their low-diversity peers and deliver higher return on equity. Investors in more gender-diverse companies reaped an extra 3.5% CAGR in their returns. $28 trillion added to global GDP if women participated equally in the economy to men. $5.3 trillion estimated increase in global GDP by 2025 through closing the gender gap by 25%. Two of the biggest are from the World Economic Forum and McKinsey. Both highlight the enormous contribution to global growth that gender equality would yield. The World Economic Forum, WEF, estimates that global GDP would increase by $5.3 trillion by 2025 if we were to close the gender gap in economic participation by 25% over that period. The same report notes that the economic gender gap has improved by only 2.5% since 2006 and will take more than 200 years to close at the current rate. Interestingly, only 59% of the economic gap between men and women is closed in the 149 countries covered by WEF's index, whereas in health and education, the gap is closed at 95% and 96% respectively. The biggest gap is still in the political arena, where only 22% is closed. McKinsey's figures for the potential GDP boost of closing the gender gap are equally bullish. The McKinsey Global Institute estimated in 2015 that $28 trillion would be added to the global GDP by 2025 if women participated equally in the economy. That's an increase of 26%, as big as the US and Chinese economies combined. Okay, so there's not much you can do with those huge sums, except perhaps be skeptical about them. But it's noteworthy that so many of the elite organizations advising the world's CEOs, most of whom are not female, have come to this conclusion. However, most readers won't be looking for evidence at a global level, but rather something closer to home to improve the performance of their own organization. Again, McKinsey offers some compelling numbers in the 2018 report Delivering Through Diversity. It turns out that companies in the top quartile for gender diversity on their executive teams are 21% more likely to outperform their competitors in the bottom quartile. This finding is based on data from 1,000+ companies in 12 countries. Note that these results were for gender-diverse executive teams, not boards, albeit both are important. The best performers also had more women in line management roles, with revenue and profit responsibility, than staff roles, HR, marketing, etc. The same study found an even higher performance boost, a whopping 35% for those with ethnically diverse teams. An MIT study found that professional services firms that switched from being all male or, more rarely, all female offices boosted their revenues by 41%. As Dame Scilla Snowball, chair of the Women's Business Council, told me, the bottom line is that diversity is good for everybody, women and men. There appears also to be a financial diversity dividend. The investment bank, Morgan Stanley, has concluded high gender-diverse companies have outperformed their low-diversity sector peers for the past 5 years and deliver a slightly higher return on equity. Credit Suisse looked at the performance of more than 3,000 companies globally. Again, it found that diversity paid dividends. Investors in more gender-diverse companies reaped an extra 3.5% compound annual growth rate in their returns versus less diverse counterparts. And MSCI